Hello, in this lecture we will define cash receipts journal. According to Fundamental Accounting Principles, wow, 22nd edition, the definition of cash receipts journal is special journal normally used to record all receipts of cash. When thinking about a cash receipts journal, we're usually considering something that could be used for a accounting system that was done by hand rather than electronically. Cash receipts journal being something that can simplify the process, allowing us to enter the information with less text than would be done if we had to do basically a journal entry and post that journal entry for each type of transaction. Cash receipts journal can also be useful in that the format of the cash receipts journal is a format that forms could be printed from say a computer system like QuickBooks. We may want some type of report that would be very similar to the cash receipts journal. Cash receipts journal recording all the cash receipts. Therefore, if we were doing an accounting system by hand, anytime we say cash was received, we would record it in the cash receipts journal. Might look something like this. We got the date, we got who it's from, we could have the amount, we would have the amount that was received, and then we need to know what other account is impacted. Notice that when we look at the cash receipts journal, we know that by the fact that it's in the cash receipts journal, we eventually will be debiting cash when we record this at the end of the time period, whether that be the end of the month, the end of the week, or the end of the day. What we need to know is then group this in the what's the other side of the journal entry going to be. We're going to debit cash. What's the credit going to go to? For example, we may have gotten this money because of sales, which might be a normal transaction. Therefore, we're just going to have a column for sales, and that's going to be the transaction. We have the total over here, the 5 equaling the total amount. We might have another transaction that is 1,600. Again, we need to assign that to an account. We know that we got cash. Cash is going up because it's the cash receipts journal. The other side in this case might be the credit going to accounts receivable, meaning we got cash for work that was done in the past, now receiving the cash. We could have some other transactions that would follow this. If we have our last transaction, we're going to say it's from the IRS, and we got money of $320, probably a return here, and we may not have a category. So our cash receipts journal may not have a category for everything we got cash from. So we might have this other column that we put into other. We would then have to figure out where that should go when we record the transaction. Then once this is done, we can have at the end of the week, the day, or the month, a summing up of the columns. And we would say that we can record this as one lump journal entry for this time period into our accounting records, meaning that we're going to say cash is going to be debited by the total amount of $3,020. Then we're going to credit the other accounts that make up that $3,020, including accounts receivable, crediting $2,200, the $500 for sales, and the $320 to some account related to the return we got from the IRS.